should be able to understand once they join any organization. So transaction price 100,000 to be allocated between machine and support. As I said, separately observable price of machine 95. Standalone price, it's not observable, so you estimate it how? 20,000 cost, 50% markup, so total 30. So total becomes 125, but transaction price is 100,000. So discount, customer is getting a discount of 20%. 25 on 125 is 20%, right? So the price of machine will be how much? 95,000 less 20%. So price of the machine will be 76. Price of the support 30,000 into 80%, which is 24,000. 76 plus 24 is 100,000. When will you recognize the revenue of 76,000? Immediately when you transfer the machine at the hands of customer and you pass on all the rights in the machine to the customer. Immediately. When will you recognize the revenue for support? 24,000 will be spread over a period of 1 year, which is generally done equally. So maybe at the rate of 2,000 rupees every month, you will go on recognizing that revenue. So remember, every time the company cannot recognize the entire 100,000 as a revenue immediately when the machine is supplied. It's like advancing your revenue. Instead, it has to split the revenue and recognize only when it is due to be recognized. So very, very useful this, very useful knowledge. But as I said, I mean, this is not a complex process for companies because they have softwares which quickly do all this for them. I hope this example would have given you a lot of insights into how it is to be exactly done. Once we allocate the transaction price, we now come to a stage where we recognize revenue, either immediately at a single point in time, or that means over a certain period of time, like what we said in case of support, 1 year period, as you go on satisfying performance obligations. So if the obligations are satisfied over a period of time, the standard says you should use percentage completion method. So end of 1 month, 1/12, 2/12, 3/12, like that. It's a percentage completion method, one way of finding percent completion. Customer will receive and consume benefits of the performance as the entity keeps on giving the service. Cleaning services, for example, housekeeping service in the companies, yearly contract issued or annual maintenance contract. For simple products which we use at our homes, the AquaGuard, Hema Malini advertises that, 100% pure water. AquaGuard AMC. When would that company, recognize its revenue? If it's a 1 year contract, every month it will go on recognizing 1/12, like that. So it becomes easier for organizations to understand when to actually recognize revenue in the financial statements. And once you do that, it's easy for users of financial statements to understand the logic behind the amounts, and that's more important. If, of course, the performance obligation is satisfied at a single point in time, naturally it's not satisfied over a period of time, so you immediately make you recognize the revenue, like in case of that machine, 76,000 rupees immediately once the machine was handed over. So the customer automatically is obliged to make a payment because you have passed on the legal title of that asset to the customer. And entity has also parted with the physical possession because it has been handed over to the customer. And if once the product is handed over, if something happens to the product, the customer has to bear the risk. Of course, if it is within warranty, company will satisfy it. So when to recognize will depend, in case of revenue, will depend on when the performance obligation is fulfilled. If it is fulfilled at a time, recognize at that time, provided certain conditions are met, of course. If it is satisfied over a period of time, use percentage completion method. The housing units, for example, percentage completion method. Construction sites, percentage completion method. Project companies especially. Companies building residential complex enters into a contract for a specific unit under consideration. Flat number 102 in building C of tower such and such. Okay. Contractor provides for following. Customer will pay a non-refundable deposit. Customer has to pay progress payments depending on the way the work is being done. And if the customer fails to pay the progress payment, company has a right to all the contract consideration if it completes the unit, of course, not before that. So regardless of the fact whether a customer pays or not, company has a right to all that. The company can sue the customer and get the money. Entity cannot sell that unit to other party. If that is the terms of the contract that are signed by the parties, obligation is satisfied over a time, not at a single point in time. Why? Because entity cannot transfer that unit to somebody else. It will be breach of contract. But entity at the same time has a right to all the consideration. Because of that, the obligation is satisfied over a period of time. Right? So that's how you could use the set of examples to explain the principles to this. If now I just give you an example where the contract is altered, other conditions remain same, but now let us see. It's not a non-refundable deposit, it's a refundable deposit. If company cannot construct it by a certain time period, like I stated under RERA, amount paid has to be refunded. Remainder of consideration is due only on the completion of the unit. So it's not due as per progress payments. No, it's due only on completion of the unit. And if the customer defaults, the entity can transfer that unit to somebody else. But it can retain the deposit. It's not entitled to the full consideration. If these are the terms which are signed by the parties, then obligation is satisfied at a time, not over time, because it's not a service contract. Customer doesn't control the unit as it's getting created. It will control the unit only when after completion the unit is handed over to the customer. And the entity doesn't have any enforceable right to the full consideration. No. It has only a right to the amounts paid, retain the deposits that are paid. So how do you measure the progress towards completion? There are two methods, namely output method and input method that is given by the standard. Output method is pretty straightforward and simple. Revenue you recognize based on the value to the customer, value of the goods and services that are transferred to the date relative to remaining goods and services. So for example, direct surveys of performance completed can be done. The work can get certified, or the appraisals of the results achieved, milestones achieved, or times elapsed, or number of units delivered. Simple example. I mean, if there is a contract to construct a road of 50 kilometers, you have completed constructing 10 kilometers, passed it on to the customer has accepted it, you can recognize the revenue on output base. What is the output? 10 out of 50 kilometers done. So if the total price for 50 kilometers is, let's say, 60 lakh of rupees, 1/5 revenue, 12 lakhs can be recognized. That's the output method. But it's useful only when you can measure the output. If you can't measure the output, then output method cannot be used. I mean, 10 kilometers completion out of 50 kilometers is measurable, right? It's observable. But if it is a type of a product, for example, you agree to construct a machine. How do you know how much machine you have completed? It's very difficult to measure the worth and especially the value thereof. So there, input method has to be used, not output method. How to use input method? is generally the purchase percent completion. Revenue is recognized on the basis of inputs. Entity's efforts means inputs to satisfy the performance obligations, which are relative to the total amount of expected input. So if you say, okay, you are supposed to use 1,000 tons of cement in that road construction, and you have used 350 tons of cement. So 350 input relative to total input of 1,000, 35% completion. You're supposed to, let us say, work 10,000 labor hours. You have already worked for 2,000 labor hours. So 2,000 upon 20,000, 10%. Costs incurred. You're supposed to agreed contract price between the two parties is, let us say, 100, and the cost of that completion of the contract is 80, and you have spent 10 out of that. So cost incurred as a percentage of total estimated cost, 10 divided by 80, 1/8. So 1/8 of the contract price, 1/8 of 100 can be recognized as a revenue. So that's input method. This may not be useful. There is no direct relationship between inputs and the outputs. So you will have to judge by the nature of the contract whether you will be in a position to use input method or output method. Generally, it cannot happen that none of these can be used. No, it won't happen. So, as I said, we are coming towards the closure of our today's discussion. I'll show you some of the disclosures that are made by real life companies in their very recent annual reports, 2023 March year end. Bajaj Auto, you know, Bajaj Auto manufactures automobile two-wheelers, right? So look at the similarity between the principles stated in 115 and the actual disclosures made by Bajaj Auto. This is a disclosure made by Bajaj Auto in their notes to accounts, accounting policies followed. And they say revenue is recognized when control of goods, vehicles, or parts and services have been transferred to the customer. And what is the amount that they recognize? Reflects consideration to which the company expects to be entitled. Net of GST. That is the wording that they have used here as such. Consideration payable to customer, cashbacks, cash discounts, etc., etc. They will be accounted for as a reduction from revenue, not as a cost. Reduction from revenue. So any, nowadays there is a lot of benefit that is passed on. You may be seeing sale of car model so and so, 40,000 worth benefits. So that 40,000 benefit will come as a reduction from revenue for the selling company. Warranties accounted, as per terms of contract. Assurance type of warranty. And there is a relation between Ind AS 37 and 115. Tomorrow I will discuss this part of warranties with you. Larsen and Toubro is a big construction company. See, the first was automobile company. Second disclosure I'm showing you is that of L&T. It says recognized when a performance obligation is satisfied by transfer of goods and services. So that is exactly the same wording as in the standard. In case of L&T, of course, it's a project kind of a company. So performance obligations will be satisfied over time. So they measure the progress towards complete satisfaction of performance obligation. And the progress is measured using proportion of actual cost incurred to date to total estimated cost. So which method they're using? Input method. So you will find the theory and practice exactly. So same principles are being used. We should be able to link the principles to the practical disclosures made. And as I said, that whenever things are not explicit, you will have to apply judgments. Now for revenue standard, L&T has very clearly said, okay, we have used significant judgments in determining the revenue to be recognized when especially performance obligation is satisfied over a period of time. In determining expected losses, Because if a contract is going to result into loss, and that is what is your expectation, entire loss has to be immediately recognized. So in determining the expected losses, the company has to make use of judgments. Why? Because of course, it's something that you talk about, which is likely to happen in future, and that's why judging today is very important. And judgment is also required when you apply to arrive at variable consideration amount. Because one of the examples of this variable consideration is, let's say, you tell your customer that if you buy 2 lakh pieces, I will give you 2% additional discount. It's a March year end, and the customer has bought 1,20,000. Now, what should I do? Should I provide for that 2% extra incentive as a reduction from my revenue, or should I wait till all the 2 lakh goods are sold? The standard says, please apply your judgment. So that's where the judgment has a great role to play in this case. So one company which I took, automobile. Second company I took, that was of project. Third, I am considering Sun Pharmaceuticals. It's a pharma company. Simple product business. So revenue net of GST, net of chargebacks, net of rebates, calculated based on historical experience, right? So there is sufficient evidence available on which the company can make the judgment naturally. If the Sun Pharma is having a profit sharing arrangement, then amount which is equal to base purchase price is immediately recognized upon delivery of the products. Additional amount representing the profit share actually can be recognized only to the extent that it is highly probable that a reversal will not occur in future. So if you say, hey, 10 lakh tablets are to be made, okay, and the base price is, let's say, 15 lakhs of rupees, and profit share will be about additional 2 lakh of rupees. So 10 lakh of rupees of revenue can be recognized upon the delivery of the products, but 2 lakh profit recognition, profit share will depend, which will be contingent upon future period of time. Getting the financial statements prepared, getting them audited, whether the profits are as per the estimate, then only that extra 2 lakh of revenues can be recognized. If you can prove it, that it's highly likely that it will not be required to be reversed in future. Royalty on accrual basis, license fee, like license fee, right? So these are some of the real life examples about the disclosures of revenue recognition that I have been able to provide to you. And this is what, covers the topic of revenue recognized from arising from contracts with the customers. So if there are questions, I'm ready to take the questions, or otherwise this is the stage at which I stop my presentation.
Thank you, sir. Are there any questions from the audience, the participants?
Well, the questions may be typed in the chat box. Still have 5 odd minutes remaining. One can answer them.
Participants, if there are any questions, kindly type it in the chat box. We'll take it up. Sir, I guess we can have the Q&A session tomorrow towards the end of day 2.
Yeah, sure.
Probably
Sure.
that could be the constraint.
Right.
Yeah. So, okay,
Yeah.
sir. Thank you.
Okay.
As we wrap up today's insightful session, I want to extend my sincere gratitude to our esteemed resource person, CMA Milind Date sir, for sharing your expertise. Thank you, sir.
You're welcome. My pleasure.
Thank you, sir. I also want to thank each participant for your active engagement. We look forward to reconvening tomorrow for another day of enriching discussions. Until then, thank you and have a wonderful evening. Thank you.
Thank you so much. Bye. Have a nice evening.
Thank you, sir. Thank you very much.
Thank you.
We'll meet tomorrow, sir, by 3 o'clock.
Yeah, sure. Bye.
Yeah. Thank you, sir. Bye, sir.